Well, good afternoon there, traders and friends, market enthusiasts right around the world. You're here with James on behalf of Pivot Point Trading. Today will be some form of a candid Wednesday afternoon market recap. If you are interested in where we are trading in the direction it looks as though we are sort of transitioning into, I'd encourage you first of all to have a look at Tuesday's market recap. It was the video I did release yesterday afternoon. It did go for about 18 minutes, but we went through in somewhat of great detail to what I usually do in these YouTube updates, both horizontal types of resistance levels. We also went through the 100 and 200 simple moving averages, some of the exponential moving averages, just how overbought we are during this, some form of a short squeeze as people are buying to cover on very low volume. We also went over these candlestick patterns, specifically on the NASDAQ. It was again that shooting star reversal candlestick at a resistance level, again warning us that the market itself has got a very good chance, at least in the intermediate term, of rolling over. Today we saw that the Dow Jones Industrial Average was down just over 150 points. The S&P 500 just down 10 points. I mean, not the biggest move, but the markets again are very structured. They're moving into our red boxes, and as per other forms of technical analysis, we're starting to really see the beginnings of confirmation that this market wants to transition lower. On top of that, again, we're seeing the continuation of these lower highs. As you can see, again, the most recent swing high, which we've just had to sit through on the NASDAQ, has not surpassed the high which we saw in mid-September, where, surprise, surprise, we saw the last shooting star candlestick set up, other than the one which we saw during Tuesday's market activity. Now, the purpose of this Wednesday afternoon market recap is once again just to recap the intraday movements. I've just done that more or less just based on an end-of-day closing price. All three markets did move lower. It wasn't the biggest day, but what I'd like to do is just really sit down with you candidly and speak about a bigger pattern which I'm starting to see across all three of the US indices, but most noticeably on the Dow Jones Industrial Average. I began to sort of question this long-term chart pattern really throughout late August, definitely into September 2015. I kept it to myself. The reason why I kept it to myself was because I really felt as though it was too far-fetched to be true. I really did mean that, and for that reason, I didn't want to make this public because I just thought it was just too extreme. I mean, I just thought there was no chance that this could possibly be a valid pattern. But looking at what the chart has done, and to see price action, and to see this market act as we have forecasted, to see it move back into this resistance level and begin to turn over at the location which it is, I want to bring it to your attention now. And for me to do that, I simply need to remove my annotations from my screen so you can simply see the chart itself, and you can simply, once again, pardon me, see the price structure which I'm looking at. Now, for this particular outlook, I mean, first of all, I made this public over the weekend in that pro analysis class. This is the first time I'm sort of making it public to a wider audience on our YouTube channel. It doesn't mean that it has to play out, but candidly, again, I just want to share this information with you because it's something which I'm very much paying close attention to, and it's something which I haven't seen on a market indice in terms of time, in how long it's setting up, and also just what it means for the market moving into 2016, and if this is going to be a legitimate pattern in terms of a reversal, and the confirmation which we need to see before we can, technically say, look, be very, very careful, or at least exit your longs if in fact you're not hedging up at these higher levels which we've seen over the past 2 months. Now, without further ado, I'm just going to walk into this chart pattern for you. The chart pattern which I am potentially seeing is a head and shoulders chart pattern. It's as simple as that. Generally, in terms of terminal reversal chart patterns, so something which ends a bull market, generally we look for patterns with about 3 months of time. When we see a chart pattern set up, so I'm talking about a head and shoulders chart pattern, which goes in the format of this. So you've got the left shoulder over here. I'm just going to put LS. We've got the head. And then we have the right shoulder, all right? Generally, we want to see this anywhere between 3 to 6 months. I'm just going to write 3 to 6 right here. The same is true if I change my color for what we call a triple top. Okay, about 3 to 6 months if it's legitimately going to be a long-term trend reversal. We also have, double tops. There's all sorts of reversal types of patterns, but these are the major ones, the head and shoulders and the triple top. So when we've been going through this in the year 2015, we've been really paying attention to this peak right here, this peak right here, and potentially this peak right here. We've been saying to ourselves, look, it takes at least the basic formation of a head and shoulders type of pattern where we make that higher high and then we make the right shoulder. But it also makes the suggestion, at least, of the chart pattern of a triple top. It doesn't really matter which way you slice it. They are both very bearish types of positions. The further we've transitioned into 2015, we've started to see the establishment of legitimate lower highs. And most recently, what is most important is the first establishment of the most macro lower low. This is taking into consideration the higher lows which we've seen since 2009. If I zoom out and show you this, you can see that price itself has continuously made higher lows. This is synonymous, obviously, with the trend continuation in a very bullish chart as price continues higher. What we've seen throughout the month of August is the first legitimate lower low. So you can see this low over here in comparison, either dating back to January 2015, you can go back to December 2014. But if you really want to take it back, I mean, we've broken the low which we set up in October 2014. So this is a really big deal in terms of just basic price structure. Now, what is becoming very apparent to me, this is really where, or what I wanted to speak about in this particular video, is that not only should we be paying attention to these little peaks right here and saying, look, it sort of fits the pattern of 3 to 6 months. Yes, it does. It might sort of be withdrawn maybe closer to 8 months. We sort of have had confirmation below this peak. So when we sort of saw, or when we started to see the technical breakdown of this level, definitely below the December and January lows, it was very easy to see this rollover happening, although that we personally, or at least I expected to see the market rally throughout the beginning or the mid-August and then see the rollover. We definitely saw the rollover, and now we're starting to see the back test of this smaller type of pattern, which I've just sort of walked through with you. This is where it gets really interesting. If we look out and we sort of take our time frame out a little bit bigger, so we start looking at more data on the chart, I really want to get this clear. So I'm going to zoom in a little bit just so I can best show you this. If you really, I guess, forecast from about July 2014, I'm just going to draw this so it really zooms in, so you can sort of censor or sort of really zone in your perspective to this green box right here. If you start to look at this big pattern setting up, this is where it gets very, very, very dangerous. Instead of this being over here some form of a left shoulder, imagine if this period throughout July 2014 through to October, so we're talking about 4 months right here, what if this was a left shoulder right here, okay? Pardon the pun, the left shoulder over here. What if this set up for 4 months? We've broken above the left shoulder, which we expect in a larger head and shoulders chart topping pattern. And for the entirety of 2015, or at least through to August, and even late 2014, including November and December over here, what if we have just established a legitimate head on the market? So we've got the left shoulder, which is set up for 4 months from July 2014 through to October. We've now established the head from December 2014 all the way through to pretty much July or August 2015. So we're talking about 7 or 8 months just setting up the head, potentially longer if you forecast December. You're talking about 9 months for the head alone. So I'm just going to write 9M here for 9 months. And you've got 4 months over here. What does it look like? And I'm asking you the question right now. I don't have the answers to this. I'm sort of just pointing out the obvious right here. What if what we're doing right now is some form of a right shoulder? I mean, that would be the biggest terminal reversal pattern which I have seen not only for a stock, but definitely for a market indice. All right, we're talking about a chart pattern almost dating through 1.5 years. By the time that this pattern concludes, and if it does play out, that is some extreme sentiment shift, some massive psychological shifts, which we are currently seeing technically in the Dow Jones Industrial Average. It's also setting up in the S&P 500, but I love to trade the Dow Jones. It gives us the most structure, and it is very, very, very disciplined. The reason why, again, I'm speaking to you about this is because it's something which I've been sort of toying with and sort of thinking about a lot over the past, again, since August and early September. But it's starting to really look as though it's setting up. On top of this, if I can change my color again, green should highlight support. So I'm just drawing in a hypothetical support level down here about, what is the figure? What is it? 16,000, just above 15,800. So this is long-term support. And look at where the market has just rallied into. This is resistance. This is what I've been speaking about on these YouTube updates for quite some time. Red line is resistance. We've rallied back up into resistance. We're starting to see the early formation of the rollover. We have that shooting star candle, which we saw set up on the NASDAQ yesterday. Markets were down today off from this potential resistance level. Long-term support, which we've seen since 2015, since January, is now acting as resistance over here. So I'm just going to draw these red arrows, and these green arrows were once support. Now they will act as resistance. This is why I'm so confused, because I'm not confused, but definitely torn between this big picture setup. I can see it happening. It's one thing to see it. It's another thing to let price action confirm. I've been speaking very openly for quite some time about taking active hedges, long-term hedges on the market, given the potential of this right shoulder. I'm just going to draw or write RS right here for you, right shoulder. Let's just go through a couple of sort of fundamentals right now. If the market does sell off, and I should be doing this in red because red is negative. If we do sell off when we come back down to this level down here, let's just call it 16,000. Let me bring up my blue drawing tool, 16,000. And we start to crack this level. I mean, we get below the August 2014 lows. So we say, look, if this market cracks about 15.6, 15.7, then we start to see the word which is so important in technical analysis. It's called confirmation. Confirmation that this chart pattern, the pattern which I'm hypothesizing to you right now, is actually legitimate. It's 100% real. That is only given if we sell off from this resistance level here and we take out the lows which we saw in August 2015. That would complete the biggest terminal reversal pattern I have ever seen. And I was saying to people in Pro over the weekend that I've back traded the market since the mid-1920s. All right, legitimately back tested, back traded since the mid-1920s. I haven't seen a pattern of this magnitude set up before. And I think it's very important given some of the black swan events and the general global economic weakness which we are seeing or reading about in terms of fundamental data. It's definitely highlighted in the technicals. The technicals are definitely screaming, be careful, be cautious. I just wanted to bring this to your attention. It looks like a dog's breakfast right here. I hope you make sense of it. You've got the left shoulder, you have the head, and you have the potential right shoulder right now setting up. Potential right shoulder in the perfect location to see this market roll over. If anything, we do have a little bit more upside. A little bit more upside all the way up to about 17,589. That is the 200 simple moving average. So I can see this market pulling back a little bit and then sort of whipsawing a few people as we see the final dash back up to the 200 simple moving average. So just factor in this risk if you are starting to hedge. That is essentially your risk right here, because you can place your stop just above the 200 simple moving average. Call me crazy. I won't take it personally, but it's definitely something which I think you should pay attention to, or at least be cognizant of, because it is, and if the pattern is to be true, there will be some tremendous trading opportunity for us being active market participants, but it will also allow you again to exit long-term positions and take on hedges. Hedges right now is the smartest thing you can be doing and the most intelligent trade to be opening. If you don't want to trade individual stocks, you can easily be taking out put contracts on the DIAs, the diamonds, which we call them. You can take it out on the Qs, or you can take it out on the SPYs, all right? Very, very easy derivative instruments to open. Low risk, but a lot of return at the same time, given the signals which we are seeing. I didn't want this update, this very candid update, to go for as long as yesterday. I'm not sure how long I have been speaking. I sort of got, taken up in what I just spoke through. So what I'm simply going to do is end the recording right now. I will go over this in some more detail over the weekend and individual trade setups. If you're interested in this analysis, please have a look at Pro. The link is below the video. It is a 60 to 90 minute recording, which I do each and every Saturday morning. It is posted up and it is forward looking into the upcoming week of trading, right? We go through trade setups based on what the market is suggesting on the direction which it looks as though it wants to go. But above anything else, it's definitely educational. So you actually learn how to do this analysis so that eventually you can do this autonomously for yourself. Outside of that, friends and traders right around the world, it is James signing off on behalf of Pivot Point Trading. I hope you enjoy your Wednesday evening. All the best, traders. Goodbye.